Greetings everyone. This presentation is done by Professor Manjiri Joshi from Dr. D.Y. Patil Institute of Hotel Management and Catering Technology, Pune. This presentation is about Chapter Budget and Budgetary Control of Third Year BSchS. Budgeting is one of the main planning activity of an executive housekeeper. It is the process by which, based on the actual performance of establishments in the past, estimate of expenditure and receipts are made and adjusted for forecasting future outcomes. Budget can be defined in many ways. A budget is a plan by which resources required to generate revenues are allotted. The advantage in preparing a budget is that it provides an opportunity for taking a critical look at the costs of the department, reviewing past planning and present accomplishment, and then taking appropriate steps to accomplish more in the coming financial year. The executive housekeeper responsibility in the budgetary process is twofold. First is formation and planning of the budget. Second, ensures the actual expenses are in line with the budgeted costs. Budgetary control is an essential tool of the management for controlling cost and maximizing profits. Next slide explains importance of a budget. First, budgeting avoids wastage and losses, and thus maximum efficiency is attained in the department. It keeps the manager focused on the departmental financial goals. Next importance is it also tells how to allocate the funds, how far the hotel is towards reaching the financial goals. It increases communication and coordination within the firm. Next importance is it provides a platform for internal audit, since regularly evaluating departmental results. Budgets may be of different kinds based on the types of expenses involved, the departments, and the flexibility of expenses. First type of a budget is categorized by, based on the types of expenses and assets involved. Budget may be into capital, operating, and pre-opening budgets. Capital budget is also known as a capital expenditure budget. It is allotted according to the use of a capital assets that have a lifespan considerably in excess of 1 year. These are assets that are not normally used up in a day-to-day operations. Furniture, fixtures, and equipment are typically example of a capital expenditure. And capital expenditure in the housekeeping department may include room attendance cart, vacuum cleaner, general floor machine, carpet shampooing machine, sewing machine, laundry equipments, and so on. Next type is operating budget, which is also known as operating expenditure budget. It forecasts expenses and revenues associated with the routine operations of the hotel. Operating expenditure as are both cost hotel incur in order to generate revenue in the normal course of doing business. In the housekeeping department, the most expensive operational cost is salaries and wages. Recycle inventory items, cleaning and guest supplies are also operational cost. Next is pre-opening budget. This is necessary for the smooth opening of the new hotel. The budget allocate resources for opening parties, advertising, generation of initial goodwill, liaison, and PR. Pre-opening budget also includes the initial cost of the employees' salaries and wages, as well as supplies, crockery, cutlery, and other items. Next type of a budget is based on the departments involved. Budget may be categorized into master budget or a departmental budget. Master budget represent the forecasted target set for the whole organization, and incorporate all incomes and expenditures estimated for the organization. Departmental budget represents, each department of the hotel forwards, a budget for its estimated expenses and revenues to the financial controller. For instance, there would be a housekeeping budget, maintenance budget, and so on. In fact, rooms division budget in this case, the combined budget for the front office and the housekeeping department. Next, budget may be classified on the basis of a flexibility of expenditure. Fixed budget remains unchanged over a period of a time, and not related to the level of a revenues. Such budget includes the budget of advertising and administration. Flexible budget predetermine expenditure based on the revenue expected and differ from different volume of a sale. Example, stationery, electrical cost. Next slide explains about housekeeping expenses. These expenses that need to be budgeted for by the housekeeping department may be operating expenses or capital expenditure. Operating expenses include salaries and wages, employee benefits, contract services, linen, uniform, laundry, and dry cleaning cost, pest control, flowers and horticultural expenses, miscellaneous expenses. Whereas capital expenses include equipment and machinery, furniture, and fixtures cost. Next slide explains about housekeeping room cost. Cost occupied room is calculated on the basis of operating expenses and room sale. The operating costs can be variable, semi-variable or fixed. And room sales for the year are forecasted by the front office manager. The monthly breakup are also outlined in the forecast. This information is given to the head of the department far in advance for the preparation of a departmental budget. In operating expenses, variable operating expenses includes laundry cost, guest supplies cost, the cost which increase or decrease in proportion to occupancy level. In semi-variable operating expenses cost includes flowers, linen, uniform, cleaning supplies cost which fluctuate partly according to the occupancy level. Whereas fixed operating expenses includes expenses is deducted on monthly basis, example pest control. Thank you.